From the morning reading, after a breathtaking binary event in the after hours, Brexit vote sends the world markets tumbling. Gold, volatility, and bonds are all very much higher. After hours alert, what was known about the Brexit vote before it happened was that to stay in the EU was status quo and certainty. To leave the EU was uncertainty, and with that uncertainty, increased volatility. The Brexit wins 51.9% versus the stay 48.1%, and the world markets dropped amid the uncertainty of what it really means. The S&P futures dropped more than 100 points. VIX volatility futures jumped more than 10 points. Gold futures jumped more than $100, and ZB bonds jumped more than 7 points. While nothing other than the market reaction changes immediately, the UK now moves into the process of negotiating the terms of the exit with the EU, which will evolve over the next few months, leading to a process that may take up to 2 years to complete. Clearly, Thursday's strong positive market action suggests that the net institutional conclusion was that the vote would be to stay in the EU. That conclusion was wrong. Market action discounts everything, and as it became clear that the Brexit was winning, markets discounted the surprise vote, resulting in sending stocks and future prices lower and volatility, gold, and bonds higher. Markets generally sell off until prices get to a level that investors and traders are attracted to buy by what they consider bargain prices, as they did on Monday, August the 24th, 2015. Now we will wait to see at what levels buyers will take advantage of lower prices. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:18 a.m. Mountain Time, and I'm recording this in preparation for the market day of June the 24th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Well, as the reading from one of my morning authors suggested, it was a huge event, a huge binary event, and these are the kinds of events that basically reset everything. Our normal, usual walk through various numbers and so forth are largely meaningless after an event in the overnight action like this. Also, as a result of the surprise and the scope of the surprise, remember all the institutions were buying yesterday, and you saw huge up days. In fact, we had standard deviations to the positive side yesterday on 2 of the 4 indices. And here we go, just flat out wrong. The polls were flat out wrong. And another set of polls, and that's another story, but another set of polls leading into a major election that are just not capable of actually being reliable to forecast an outcome, and you end up with a surprise, and it is in the surprise that you get the volatility, and this volatility is sharp, fast, and severe. The amount of futures volume that transpired last night is breathtaking, and the action that you saw on bonds, gold, volatility, and the regular index futures, all very, very, very significant numbers. There's no coming around this in any other way than to say this was a big, big deal to the markets and could reset things for quite some time to come. As the morning author also suggested, we're going to have to look and see what level the market participants actually start to find as something of significance. And let's go ahead and go to the morning report just to get some scope of just what we're talking about. At the time that I cut this early this morning, the S&P was down about 3.5%, or some 75 points on the S&P futures. Russell futures were down nearly 60 points, or some 5%. NASDAQ futures were down about 3.5%, and the Dow futures were down a little less than 3%. Crude oil down sharply, and commodities indeed responded in a big way to this action, down nearly 4.5%. The euro was down 2.6%. Of course, the big story is what happened with the British pound. I don't normally follow that market separately, but it's at a many year low. In terms of the bond, and you see at the time of this cut, we're up about 3% and nearly 5 points at some points in the overnight action. This was up about 7 points. Gold also up sharply, up nearly 5%. So big time rush to security and havens such as bonds, the long bonds, and gold. And you see the overseas action, of course, the closer and more impacted you are by the United Kingdom and their vote, the more severe the impact. You see China down 1.3%, Hong Kong down about 3%, Japan down almost 8%, Germany down well over 7%. You might ask, why is Germany down more than United Kingdom? Well, for those major players, especially more wealthy nations left in the EU, the absence and exit of the United Kingdom puts more pressure on economies such as Germany and Spain. And then, of course, the United Kingdom itself down about 4.5%. Again, at the time of this cut, the markets are extremely fluid and things are definitely flying around. In terms of macroeconomic reports for today, you do have core durable goods and University of Michigan consumer sentiment. I would suggest neither one of those will be a blip on the screen. It's all going to be about digesting what does this mean and who are the winners and losers of this Brexit vote, because they're going to be ultimately some companies, some industry groups, some sectors that are going to fare better, and there's going to be others that are going to definitely take a hit as a result of this unwinding action of the Great Britain coming out of the European Union. So a lot of those questions will be at the topic of the CNBCs and other type media outlets today, and certainly in the institutions, the Fidelities and Vanguards, there are going to be significant discussions as to how their particular portfolios are aligned with this process that's about to unwind. There's going to be a need to find answers, and with those answers, you will eventually find that the market will settle, and when it settles, it's going to settle at different places for those different industry components. In terms of volatility, obviously, most of this is mechanical as of the close yesterday, and the binary event pretty much came in after this, so this is pretty much meaningless at this point, other than to say that we certainly were pricing in and noting that volatility had been increasing and that this was on the table, that a binary event such as last night was predictable and foreseeable. And while the polls were maybe making you think the thing was going to be all hunky-dory and this was just going to pass, perhaps like a hurricane warning offshore, and then it turns and nothing really comes of it, well, this one turned inland and hit right on top. And you see the skew here, 145. That was absolutely a warning sign. Short-term VIX up over a 20 was definitely a warning sign that these kinds of conditions were in the realm of possibility, and certainly that did happen. Let's go ahead and go to the charts, and we'll start with the S&P futures. And you look at this massive action last night. Obviously, yesterday's candle put us back up within 2% of the all-time highs, back up into the area of resistance. And in the overnight, at the very, very beginning, when things were looking like, okay, everything's going to be fine, Brexit is going to, the folks that want us to stay in the European Union are going to win. But then as the key districts started coming in, and the votes to stay in districts where it was expected to be strong were not as strong as expected, and then the votes in other districts where you expected to be more of a challenge had more, it started to swing that, and you started to see very quickly that this action started to turn. Do know where it did turn. It just barely ticked below 2,000 on the S&P futures. Big round number. I would suspect that the institutions did come in at that point and say, we are willing to buy at that level. And you've had a pretty significant overnight reversal off of that price. And currently price is up around, some 35 plus points higher than that point. So that's pretty significant action there. We'll continue to watch that, but this is our first line in the sand, as it were, at this point now, because everything else was blown through. But certainly you'd want to see that the 2,000 would hold. If 2,000 doesn't hold in the price action of the next day or so, then we open up ourselves to something much larger, and a drop perhaps back down to these much earlier swing lows. As it stands right now, that's first line in the sand. We'll continue to watch that. The next thing is in terms of, obviously we produce daily price guides for the day trading members of our room. And many of those levels probably don't mean much today. And I would suggest that as you look at where you think support and resistance is, you need big time confirmation that the markets are actually supporting those conclusions, because at this kind of energy and this kind of momentum will overwhelm the normal kind of day trading support and resistance levels. So this is all about energy and momentum, and you've got to watch those breadth indicators, those momentum indicators, and that price action is going to be far, far more fluid than in a typical day trading mode. The other piece to this is that you've got to take into account that the current volatility here is going to make your normal stop sizes and the risks that you might have become comfortable with perhaps obsolete. It will, if you're normally using a 2-point stop, 2 points is nothing in a market where you have dropped 100 points overnight. And this kind of a market can whip around and take out, 4 and 5 point stops just to turn and go where you thought it was going to go. So if you're going to play in this kind of market, the opportunity is breathtaking in terms of the amount of movement that is at hand, and yet at the same time, the price to pay, it's much like going to the big boys table in the poker game. If you don't have that big ante, you better just sit back and watch the big boys play in a market like this. So that's your S&P. Obviously, the story is repeating across the other markets. And you see, though, the Dow also a big wick down here. So it turned at about 17, we'll call it a 175 area. In terms of the NASDAQ, also a big wick. So we're seeing across the indices, something of a turning point. So does that area hold, or is this just something of a kind of a bounce and then we just set up for a bear flag and we take it down another leg? We do not yet know those kinds of answers, but we're going to certainly watch for these key levels. Also a wick down here on the Russell futures. In terms of volatility, and we'll use the futures, of course, you had a spike up to as much as about a 28 in a similar area as where spikes had kind of come to an end in the past. And I'm talking about the past year. Many of these spikes ran up to around 28 to as high as almost 31 before turning. And you see volatility, while very, very high, as people have started to digest these returns and run those permutations in terms of, what does it mean to the portfolio that's in play. It's started to stabilize, and you see volatility, while still very high at over a 21, is nowhere near the 28 that it was at some points last night. The same thing I suspect is going to be true with gold, that much of the pop in gold is starting to subside, and indeed now on the inverse side you see where gold has come down quite a bit from those overnight highs. And then bonds, we had a point where it was up some 7 points, and it's also come down quite a bit. So all these markets are starting to kind of revert back towards where they came from. We'll have to see just how far they come and where do they settle, as especially the action of the all participants comes into play in about an hour when the market opens up and everybody gets to play. Now, a couple things to think about in the first, especially 15 minutes to 1 hour. Likely anybody who's got mechanical stops in could very easily find themselves being stopped out. And as the market digests that action, you'll likely see both volatility as well as some weakness. But eventually, of course, there's other participants who are going to find value in snapping up those stops, and will be happy to accumulate that business at that price, and we'll start to see some stabilization. The question then is, where does the market go from there? So the market open's not going to tell you much, because it's going to have those stops being run. But an hour afterwards, watch to see where things start to trend. If indeed we start to set up for a trending day and the market starts to make a series of higher highs or higher lows, or the inverse, then that probably is more telling as to where the action will start to go for the day. Okay, let's go ahead and go to the daily report. And again, these are largely built on settings that were based on the market close, and does not take into account in effect the overnight binary event. So some of this stuff's going to have to be taken with a dose of okay, that's not as meaningful today as it normally is. Right now, we have to say that we are in an intermediate term phase opinion phase 2 trend reversal, but I think that can clearly be discounted right now. We just don't know if we're actually in a bullish trend or a bearish trend until the dust settles and we find out where do the institutions think value is located. In terms of the mechanical market timing signals we actually had from IBD, it went to confirmed uptrend as of the close yesterday. Right now, that would be very much called into question. The second signal, the GMI index, a 5 out of 6, also a buy signal. And decision points, had the very weak short term, strong intermediate term, and mixed long term. So those are the three market timing signals, but all of that is in question after the binary event. In terms of the intermediate market posture, they were all strong bull across all four indices as of the close yesterday. But again, this could be very much nullified depending on where price action goes today. Hedge warning status, I considered changing this, but I think until we actually see where the price action settles out and the dust settles and the next day, it's hard to determine whether we're really at an elevated level that's going to last, this is not meant to be, by the minute kind of thing. I'm going to stick with level 1 for the moment, and we'll certainly take into account the price action of the day. I'd like to see the all participants, not just the overnight activity, and then make an assessment as to whether this hedge warning status should change. The more likely thing would be to raise it to level 1 plus or even level 2 if we see follow through on the Globex activity. Now, we've been very, very defensive and cautious in recent trading in anticipation of this Brexit vote, and certainly we feel justified in that at this point. And in looking at our portfolios in the trading room this morning, we're very, very happy that we have internal hedging to the positions. The bond position, which is part of one of our key core portfolio positions, is doing very, very well at nullifying the volatility in some of the other more exposed parts of the strategy. The same thing we've been talking about in recent days with covered call strategies and even put selling, and talking about how to be very, very careful in the initiation of new positions certainly would seem to be in play. In terms of specific warnings, it's very much a mixed bag as of the close yesterday, but much of this is pretty much meaningless at this point, other than to say that we certainly were forecasting, the potential for, a severe event, and with that binary vote, that there was kind of the conditions coming in of increasing volatility and so forth. Now, also interesting, again, mechanical, as of the close yesterday, the key intermarket risk aversion indicators all basically crossed and went on to risk on. I would expect that unless there is a huge rally today, that this will end up being a whipsaw and that they will all turn back to risk off with the closing action of today. Sentiment coming in today, short-term risk was elevated. Bonds and gold also elevated. Fear and greed, we were into the extreme greed as of the close yesterday, and that sentiment is going to be neutralized today and will swing back to the other way. And you look at the sector specific, it was just about a sea of green going into yesterday's close, with transportation and retail really being the only ones that were poorly postured. Big day yesterday, and in many ways the action of today will nullify and perhaps discount even further some of these numbers. So if you were up yesterday, say 2% in the financials, and today perhaps you're down 4%, the net is that you're down a couple percentage points. But again, the action is so fluid, we'll have to wait and see where that all settles out. Certainly financials would be some of those that would be expected to be the big losers today, and then others, it'll depend on what kind of exposure you have, not just to currency, but also to global markets, and specifically to Europe, and more specifically to Great Britain, as everybody goes through their portfolios and tries to figure out what the impact of this day is. So enough for this. Let's go ahead and roll this together. Just go ahead and get to the disclaimers. We're up over 23 minutes at this point. But really quite a breathtaking evening. Disclaimers as always. Hit the pause button if you need more time to review. And also note that at the bottom, the full disclosures can be found at this hyperlink. And we'll be back with you for Monday's market session with the Falcon Global Market Preview. In the meantime, trade smart, manage that risk, and as always, know what your exposure is.